All right, so Jay Powell caught Wall Street off guard, and that means a lot of mavens may have to rip up their game plan, right? And that, of course, includes that so-called rotation trade. I'm going to bring in now Simpler Trading VP of Options, Danielle Shay. Danielle, looking at today's session, it's about an hour ago. It looks like the same playbook that's been minting money since October 2022, right? The rotation stuff, all that's down, right? Utilities are down. What do we have? The staples that are down. Real estate not necessarily doing so hot. And of course, it's the growth stuff led by tech that's up again. So is it we back into the growth stocks now?
Of course, Charles, and you know that I love it. I love SMH breaking up above the 50 simple. You know, we've been buying that over the course of the last month. You have the NASDAQ strong today. You have Tesla rocking and rolling. So you know what? I love the reaction so far. I love the breaks higher, and I'm looking for this strength to continue.
So now the Fed obviously is going to have to probably will be more aggressive, right, with respect to bringing rates down. And that so far it looks like it's really working out well. I know that you are looking at relative strength and into options expiration. That's sort of been your modus operandi, and that's back. You gave us a nice list of names here. A lot of people would look at this, though, and say, these are overvalued stocks. What do you say to someone who says that?
Well, you know, it depends if you're trading or if you're investing. As an options trader and someone who trades on a shorter term basis, you absolutely want those relative strength names because those are the names that are going to catch fire on days like today. Now, of course, if you're investing, you know, you'd rather buy something that's pulled back a bit more. But I mean, we still have some of these stocks that are pulled back a bit more and they have room to reach new highs, like, for example, Amazon.
So let's talk about that for a moment, because you got these names, these classic momentum names that have done extraordinarily well over the last couple of years. Then you got the names that have gotten crushed, right? The NASDAQ 100 names that are getting hammered. Some people are in there, like, you know, sifting through what they call a dumpster fire. I know you don't think it's necessarily a great strategy, but one near spying is Dexcom. I just want to show the audience. It was trading here back in the summertime. It's gotten hammered big time from 113 to almost 70 bucks. I think part of it, the reason is that because of these miracle weight loss drugs, the notion is that they won't have any customers. Everyone's going to be skinny. Maybe it's a buy here, huh?
Charles, I think it's a buy, and I'm buying Dexcom because if you look at this product, it's substantially improved over the course of the past couple years. You know, there's a lot of people out there that need continuous glucose monitoring. You have 40 million people with diabetes and almost 100 million with prediabetes. I'm almost 9 months pregnant, and I've had to wear one of these things this entire pregnancy, and let me tell you, it is a godsend. So I like to invest in products that I have to use sometimes. This is one of them. I know it got hammered after the last earnings report, but sometimes that can be a good buying opportunity if the macro situation makes sense.
Yeah, and by the way, upside potential within the last year is 140 bucks, so a potential double. Danielle, thank you very much. We'll talk to you again real soon.
Thank you.
All righty, and folks, we'll be right back.